Hey everyone, Coach Investor back to another video for today. So let's talk about Shopify. Is it too late to buy Shopify stock at the start of 2024? Now, if you need a small reminder, in 2023, the stock went up over 100%. Actually, the year-over-year comparison here, you can see total return 1 year, 121.44%. So quite an outperformance. Now, despite that, as you can see, the stock is trading at a much cheaper valuation compared to its 5-year mean when you look at forward PE, EV to EBITDA, price to sales, and now, of course, price to free cash flow in the last 12 months as well, as free cash flow has been increasing in the last 2-3 quarters. Now, that said, this company has a market cap of $104.72 billion, and with price to sales for the next 12 months being at 13.2 times, PE 78.9 times, seeing that performance from last year, some might think that it might just be too late to buy this great company. Well, despite all of that, the average price target for analysts sits at $73.79 right now, which represents a downside of 9.3%. There are 48 analysts covering this stock, and 28 of those have a hold rating, 13 buy, 5 strong buy, and 2 have strong sell ratings. Now, throughout this video, I'll try and make the case as to why holding Shopify right now and maybe buying Shopify on some weakness in the overall market might actually still be a very good idea. Now, before we do so, if you like this type of videos, leave it a thumbs up, subscribe if you have not, we'll really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, if we are looking at what the analysts are expecting for the next 2 fiscal years, you can see that we are looking at quite some growth. For sales for the next 2 fiscal years, you could say it's going to grow around 20% year over year. If we look at EPS, that is accelerating much faster. I mean, in fiscal year 2023, of course, after that not so great 2022, this company has become more and more profitable. And then if we look at fiscal year 2024, EPS increasing, what is the expectation is for EPS to increase 52% year over year. Then in fiscal year 2025, another 28.48%. So you're definitely buying another Shopify right now. You're not buying a fast growing, unprofitable Shopify. You're not buying a fast growing, profitable Shopify. And that's not all, because if we look at free cash flow, which is going to be a very important component of the investment thesis here for calendar year 2023, the expectations are $843 million. Of course, we're still due to get one earnings report. But then in calendar year 2024, the expectations are for free cash flow to increase another 51%. Now, why is that highly important? Well, so that the company can grow faster, but also reward shareholders, or at least make the effects of dilution a bit smaller. Stock-based compensation has been given throughout the years, and so shareholders have been diluted, but because the share price has been going up and up and up throughout the years, shareholders do not complain. But for the long-term, let's say, success of holding this stock, you would like free cash flow to increase, and so this will let the company buy back its own shares, rewarding shareholders. Now, more recently, we've got some exciting news, and this is with regards to ShopPay. So experience the magic of ShopPay. The internet's highest converting checkout now integrates with all commerce platforms. And this is a bit similar to what we've seen last year with Shopify platforms accepting Buy with Prime for those that are using Amazon's fulfillment network, but it goes through the Shopify payments network. And here, what are we getting? Well, this is a website that was not built on Shopify, but still accepts Buy with ShopPay. Why is that a big deal? Well, it will increase GMV, it will increase GPV, should increase Shopify's financials. But looking at the other side, why should websites, what should companies do this? Well, let's take a look at a couple of examples here. So one, Natural Baby Shower offers ShopPay and sees a 13% increase in customer return rate. The website saw 6% increase in average order value, 23% of NBS customers use ShopPay as their preferred payment network, and around £10,000 saved per month on fraud and chargebacks by moving to Shopify. We've got even more examples. One out of a report here, May 18, 2023. Shopify checkout is the best converting in the world. Here's why. Shopify converts up to 36% better. They compare it to Salesforce, Magento, BigCommerce. So they say here, after months of independent study, this leading global management consulting company found that Shopify's overall conversion rate outpaces the competition by up to 36% and by an average of 15%. It also showed the power of ShopPay, Shopify's accelerated checkout offering. When used, it can lift conversion by as much as 50% compared to guest checkout, outpacing other accelerated checkout by at least 10%. The mere presence of ShopPay, according to the study, can increase lower funnel conversion by 5%. Now, seeing those numbers, of course, you as a owner of a website, of a store, you are probably incentivized to try out ShopPay, right? Because you don't want people to visit your website and then because of the checkout, which is the final step but the most important one, because of a slow checkout, see all that churn. No, you will probably try something like ShopPay. And if it works out, great for you and great for Shopify. Now, moving over to what could be a great report in a couple of weeks' time is obviously the quarter where we had the holiday season. Well, if we look at the numbers here, we can see that the holiday season broke $222 billion, setting a new record. The $222.1 billion spent at online retailers was a 4.9% year-over-year increase. More than half of that figure, $123.5 billion, was achieved in November, a 6% year-over-year increase during Cyber Week alone. The period between Thanksgiving and Cyber Monday, $38 billion online was spent, up 7.8% year-over-year. In December, $98.6 billion was spent online, up 3.7% year-over-year. According to Adobe Analytics, they also found that Buy Now Pay Later payment option usage hit an all-time high, attributing for $16.6 billion in online spending, a 14% year-over-year increase. Data also showed that major e-commerce categories saw greater discounts. For example, with electronics, discounts were as high as 31% of the retail price versus 25% in 2022, and apparel at 24% versus 19%. Now, of course, remember, prices also because of inflation were already a bit higher, not for all things, but for a lot of things. And so seeing those 30% off is sometimes a bit misleading. But all in all, I do expect that all the big e-commerce players out there, even the payment players out there, to report quite a good Q4. Now, continuing here on the strength of Shopify, we've got this right here, fastest growing brand of 2023. There is here a list of 10 brands. Number 1, Feastables, it's Mr. Beast brand. Prime is the drink that Logan Paul and KSI co-created, by the way, with another company behind that. And then you've got some other companies out there. A lot of those companies are actually being built on Shopify, which shows you that Shopify not only goes after the big legacy enterprises for them to go online or maybe switch to whatever they have right now to Shopify, but it also helps the up-and-coming or not so up-and-coming big, huge creators such as Mr. Beast, KSI, Logan Paul, help them create their own brand and grow with them. Of course, this leads to long-term success. This also leads to other creators, other brands to try Shopify out. Now, with regards to what we saw last quarter, gross merchandise volume or GMV increased 22% year over year. It's also a reacceleration of growth. As for GPV, gross payment volume, that grew to $32.8 billion, representing 58% of GMV processed in the quarter. And as they attract more and more enterprise customers, as they add ShopPay to more and more outside stores, expect that number to go up as well. Then for the remainder of 2023, I want to focus again on, for me, the most important part, fourth quarter free cash flow as a percentage of revenue to be in the high teens. Free cash flow margin and free cash flow dollars have both improved every quarter in 2023, and Q4 will continue to deliver on this upward trend, a clear manifestation of the steps that we have taken this year to drive towards greater profitability as we build for the long term. Now, as free cash flow increases, I do believe that there will be an announcement of a share buyback. I don't know by how much, because it's still quite a small amount, and this company already being a $100 billion company, it will take some time until those share buybacks actually affect the stock quite positively. But hey, they'll have to start someday. Now, looking at the graph right now, since the end of October, the stock went up 75%. RSI is pretty high, but not overbought just yet. If you want to look at better buying options, better entry options as well, the 200-day moving average sits at $61. The 51 sits at $70. Now, earnings will be here at the start of February. Of course, we will cover that as always, as with all the other companies that we cover on this channel. Again, maybe we'll see some weakness in the coming weeks. Maybe not. The market at the start of this year has been a bit up, down. But hey, I think we've seen worse already in 2021, 2022 as well. But look at what the business is doing. Look at how the business is performing from a top line but bottom line perspective as well. I do think that Shopify will do quite well in the long run. But of course, it's always better to look for a nicer entry. If you want to add to your position, always, in my opinion, do that during a red day or a red week. But of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.